So welcome back to JB Reviews. You know, a lot of people in the comment section are pretty vocal about me buying all these trucks. Last year I bought a 2023 GMC Sierra 3500. I actually bought a 2024 Chevy 3500 dually, and then I bought which is this truck I'm in right now, 2024 Chevy 3500 with the gas engine. Now I did trade that black GMC in on this truck, so I do not have 3 trucks. I think a couple people are still a little confused. They think I still have the GMC, but I do not still have that truck. So with that being said, I have a Wagoneer, my wife's car, and then I have this truck, and then the dually. We also have a Lexus that's like 10 years old, but I don't really talk about that car because we've had it for so long. And then I have 3 RVs. I have 2 RVs and then a race trailer. So that's all the stuff that I own right now. I don't own anything else. But in this video, I'm going to discuss why I keep buying trucks. Why do I keep doing this? And you're going to get the answer today. So let's go ahead and jump over to my tax accountant. You guys are going to meet him, and he's going to kind of explain some of this stuff. All right, let's go. So I'm here at Dow Tax. This is Eric. He's the owner of this business. And if you are in Utah, do you service pretty much the entire state of Utah?
Yeah.
And I see you have a webcam too, so even if someone doesn't live in this area, you can like do a webcam or something like that. Okay, cool.
Yeah, that's right. You know, we have a lot of local clients here, but yeah, we do a lot remotely. A lot of our clients don't come to the office, and we actually have a lot of clients throughout the country.
Oh.
Yeah, we have a lot of clients that either, started here and then they moved out of state and they just want us to keep doing their taxes, and then we have some other contacts, from various ways that just live out of state, that we help with their taxes as well. So
yeah. And the reason why I showed up here is because I had to fire my last accountant because there was a lot of mistakes along the way that I saw. And he was actually one that caught it for me. So like I said, it's always good to have someone in person. I was doing it with a company that just does it remotely. And yeah, I like the face-to-face. And since you already have clients that know you, trust you, that's good too. Mm-hmm. So the question I get a lot on my channel is, how am I able to buy these trucks, or why do I buy these trucks all the time? And so I do buy my trucks in my business name. Do you want to kind of discuss like some of the benefits, either way, because when I started off I couldn't do this. So what are some things that people could do starting off to kind of get some benefits with taxes?
Okay, yeah, so I can just mention up front the biggest benefit is the bonus depreciation. So, but let me cover a couple other things first, and then to get to that. So first of all, when you use a vehicle for business, one of the most important things is that you track your mileage. Because if you ever get audited, that's the first thing they're gonna ask for is where's your mileage log, to show that this vehicle is used for business. So there's an app, like one app is MileIQ that a lot of my clients like to use. I'm sure there's others out there that make it pretty easy and to swipe one way for business and swipe the other way for personal use. So then with those miles, the simplest version is you take the number of business miles and you just get an allowance for that. It's just a set rate by the IRS every year. So this year is 65.5 cents per mile, per business mile that you can deduct on your taxes. So the other option is to use the actual expenses. So you still keep track of miles, but instead of doing that 65.5 cents, this is especially helpful for more expensive vehicles, that you can take a depreciation deduction based on the purchase price of the vehicle. And so that's going to get you bigger deductions up front, especially the first year that you buy the vehicle. So with the actual expenses, the easiest is if it's 100% business use, still keep that mileage log to show that, but then you're deducting 100% of the gas, insurance, repairs, maintenance, tires, car washes, all that stuff. But then for the purchase price of the vehicle, you do depreciation on that. So one option is kind of the default is that's spread out over 5 years, that you're taking a portion of that each year. But you have some options in the first year that you can do bonus depreciation. So for 2023, it's 80% bonus depreciation. So you can do, for certain vehicles, you can deduct up to 80% of the original, the full purchase price of the vehicle.
Does that go by the GVWR too, or just?
Yes.
Okay, cool.
Yeah, that's exactly right. So so that GVWR is a key number here. So if you're over 6,000 pounds, than for the bonus depreciation, where you can deduct 80% of the purchase price without any cap on that. So
it used to be 100% too, wasn't it?
Yeah, from 2018 through 2022, it was 100%. And now, 2023, it's 80%, and it's going to continue to go down 20% each year until that gets phased out.
Yeah.
And this is, bonus depreciation is something that Congress likes to use when they're doing, making tax changes or want to stimulate the economy or something, that they'll, if they want to stimulate it, they'll do more bonus depreciation for a year or a few years, and then it comes back. And so it's changing all the time.
Okay.
So the current schedule, 80% this year, and then 60% next year, 40-20, down to 0. So that could change before we get to the end of that, depending on what they want to do. But so yeah, as of right now, you get a bigger deduction this year than if you wait till next year and you only get 60%.
So, what are the biggest mistakes you see people make, or what are just some of your biggest do's and don'ts in business, for whether it be for automotive or in general?
Yeah, the two biggest things, I'd say, one is keep business and personal separate as much as possible, separate bank account for your business. And what that does, if you ever get audited, then if you have a lot of things that are mixed together, then that just makes the IRS more suspicious, right? And you more just have to justify every single item if it's mixed together for what you've been deducting. But if you keep it clean and separate for business, then they're going to more often give you the benefit of the doubt. If it's well, we're not sure what maybe a few of these transactions are, but it looks like you did a good job of keeping it separate and they're in your business account, we're gonna go with business. It is the more likely outcome there. So it's a lot cleaner that way. And then kind of related to that, but even more in general, is documentation is key with protecting yourself, if you were ever audited.
So being descriptive of everything that you have, you're expensing in your business.
Yeah, and it doesn't necessarily have to be a detailed description of each item, but just keeping records, if you're using QuickBooks, that's great to keep track of things. You can put memos in there, your bank statements, credit card statements that show the purchases, and then individual receipts. It's a pain to keep, but honestly, that's good documentation that will protect you if you're audited. And if it's something Office Depot on your credit card statement, they'll probably give you the benefit of the doubt and say, yeah, that was office supplies. But if it's Costco, you need the receipt to show, that this was for business and not for our groceries, right? So that kind of documentation. And I knew somebody that they drove a lot for their business. And they were, it was probably 80,000 miles a year that they were putting on for their business, which, super high number.
That is high.
But they had great documentation for that. They'd come in and they'd print it out on paper. And they'd bring me a ream of paper, here's our mileage log for the year, and I was that's fantastic, it was all detailed out. And the IRS could look at that return and see 80,000 miles, that seems really high, and audit them, but it'd be such a fast audit, right? Because they'd say, here's our documentation. They're okay, you're good, it checks out. So just having that documentation, you don't have to worry about it. An audit would always be a pain, but it'll just go, so much smoother and cleaner, and you don't have to worry about, any major tax adjustments if you have all that documentation.
Well, your customers don't get audited, so we're good.
Yeah, it's pretty rare. It's pretty rare, honestly.
Yeah, see, there you go.
But I always try to think of what if we were audited, we want to have everything in line, so then we just don't even have to worry about it.
There you go.
If we do, not a big deal.
Yeah, it's always good to be very transparent. I know a lot of people try to hide things, but if you own a business, just do it the right way. You're better off just doing things transparently, and hey, if you do get audited, you don't have to worry about it. It's all covered, and you can prove every item, and you don't have to worry about having that potential liability of more money coming out of your pocket. So I appreciate you doing this. He is going to be doing a YouTube channel. We'll just name it Dow Tax. I'll put it here in the description for you guys. And next time, if we do a video again next time, we can discuss after you've depreciated your trucks, what's the next step from there. So be sure to reach out.
Sounds good.
Yeah, be sure to subscribe for the channel, and I'll see you guys in a second. So now you know why I buy big trucks and why I buy vehicles that have high GWRs, because they're all tax write-offs. my wife's Wagoneer, and the 2 trucks. So, hey, the name of the game is how to get ahead. And if you want to get ahead, you gotta fight the taxes, fight the power, right? Just kidding. But yeah, be sure to subscribe to Eric Dow and his YouTube channel for his business. He's gonna be putting together some short videos every once in a while, just kind of give you some advice, things like that. It'd be kind of cool to, you know, talk to someone or hear someone discuss some of these things, like apart from cars too. So he actually caught a few things from last year's tax season. I went back to my old accountant before I fired them and had them fix them, and then I fired them, and it is what it is. Everyone gets fired. You guys know I've been fired plenty of times in my life, so, or you know of one, but I've been fired before too, before the one I told you about. So yeah, if you didn't quite understand the depreciation of the cars, real quickly, if you make $100,000 a year, you buy a $50,000 truck SUV over 6,000 pound GVWR, you can depreciate up to 80% of that car for that year. Now, some people do the full 80% for the year. I only do about $25,000 per vehicle that I did. And I don't know why I do it that way, so I just do it that way. I just like doing it that way. And if for any reason I get audited, I can always go back and depreciate it more if I have to. So it is what it is there. But I hope this was helpful. Be sure to subscribe to the channel. Maybe in the future I will do a video on how I'm able to afford all these things. My rent, my trucks, because all I do is YouTube. And yeah, we do have a rental business with our RV that we've started. It's been going really good, by the way. But yeah, be sure to subscribe to the channel. See you guys soon.